Welcome. We are back. Big day tomorrow. Let's go over to the Discord. Shout out to Cheddar Freeze. Let's see. So tomorrow we have an FOMC statement and the Fed chair press conference at 2:30. This could shake up the market and shape up the market as well. Keep an eye out for that. So it's going to be big. We're kind of still in this earnings season. It's a very important time. We are approaching a little bit of resistance on the indices, so I'm going to be talking about that. There are some concerns I have from a technical standpoint right now with the market, but not with everything. There are some names that stand out, so stay tuned and you'll find out which ones I feel do so. And let's head over to crypto. We're going to be starting with crypto, then other markets, then the stock market, then some individual stocks. If you're new to the stream, that's kind of how I do it. And also, if you're new, hit the subscribe button. A couple reminders really quickly. If you didn't watch my video yesterday, I made like an 18-minute video on Fisker. Put a lot of work into that video. So go check that out. We're going to be talking about Fisker again tonight. Did have a pretty good day. It's been having a pretty good week, actually. It was up 2% today. And also, today's the final day. Like right now is the final time if you want to join Premium during the sale. I might do one more sale like right at the end of the year around Christmas time, but definitely not until then. So if you want to join Premium, like right now is your final time to do so and take advantage of the coupon codes. October 22, October 22 if you want to do monthly, and then October 2022, October 2022 if you want to do annual. This is a pretty steep discount. It's 48% cheaper than monthly if you decide to do that. Only available for tonight. And yeah, let's get started with crypto. Bitcoin is consolidating pretty nicely in my opinion. So you can see this previous resistance zone has held as support for about a week now. You've held this area for a whole entire week. This is kind of like maybe a ascending triangle starting to form here. I'll keep this charted on the 4-hour. It's a pretty small pattern, but maybe on even lower time frames it's a little bit more clear. So that's a continuation pattern. Hopefully it breaks up, but you're just kind of walking the demand line for right now. In general though, you can just stay above 20K. That's preferable to me. There's not a lot of resistance until that first target. It can happen quick, like out of nowhere. It can happen if you can continue to backtest like this. So keep an eye out for that. Then we have Ethereum getting closer to that 200-day moving average, also consolidating a little bit. Looking at the 4-hour, this looks like a bull flag to me, so hopefully it breaks up, something like that. And a nice rounding bottom. Let me delete this from the past. So same thing, both swings are in profit. Let me give you the percentages. The Ethereum swing I alerted is up 7%, and Bitcoin's up about 2-3%. So nice start for both of these crypto swings. They're consolidating. Hopefully they break up. Let's move on to other markets. The US 10-year broke this demand line it's been holding, or it's held since August, and right now might be back testing the breakdown. So if we get a textbook break, hook, and go, it would look something like that. And I think the next major support is around 3.5 on the daily. If we go over to the monthly, it's around like 3.25. So you were overbought, you got classic bearish divergence. Now you're back testing the demand line. You know, it's kind of been going like non-stop up. It's kind of in autopilot mode, so you never know, but the variables, in my opinion, are a little bit overbought and bearish right now for the US 10-year. Then we have crude oil, which successfully back tested this wedge breakout and even back tested this $85 level 2 days ago, which used to be highs from the beginning of November of 2021. So it's an inverse head and shoulders looking structure, very close to a bullish engulfing candle today. Honestly, yeah, I think that is a bullish engulfing candle today. So the variables are there. This actually could head higher if they do play out. We have XLE energy going even higher. It's in this wedge though. Now it's starting to look a little bit different in my opinion. I was bullish on this a couple weeks ago, but now I'm starting to flip back to bearish. You're retesting this resistance area, which I think dates back like really, really far. Let's see how far. All the way back. I mean, let's go over to the weekly. It might be a little bit clearer there. You can see this high from 2008. You're kind of retesting that, and that was also your high. This year, you're in a rising wedge, and you have classic bearish divergence. So, changing a little bit. Then we have metals, gold, bullish engulfing candle today. It's still in this down sloping channel. Not a lot has changed there. We've got silver. The bearish pattern didn't really play out. You actually were able to confirm hidden bullish divergence, hold the demand line. So I'm going to delete this for right now. And the other view of this is you broke out of this down sloping channel, you back tested the breakout, and now you're starting to make a move higher. I'd say resistance is probably around 21. You could see a couple of lows and highs over there, and then there's another resistance zone around 22. We have the dollar currency index, which is bouncing off that 109 support level. If we go over to the 4-hour, I did chart this wedge, maybe on my last stream. Gotta sneeze. But I charted this wedge, and it's been playing out, but this might be turning into a bear flag now. This is one of my favorite charts to chart the dollar currency index. It's just like pattern after pattern after pattern. Like look at this 4-hour chart, and almost all of them I think have played out. Like every bearish pattern led to a decline in price, every bullish pattern led to a rise in price, and then this neutral pattern, this yellow one, it broke down, and then the stock price went down. So you've got a bear flag now on the dollar currency index with hidden bearish divergence on both of your oscillators. So we'll see if that breaks down in the next couple of days. And then next up, this is something I was talking about last week, the potential for a dead cat bounce in the Hang Seng Index. On the weekly, it is still well under the 2-decade-long trend line, but on the daily, it was pretty oversold, and it looks like you're starting to get a little bit of a dead cat bounce. You have classic bullish divergence developing. You might even have a little bit of a wedge breakout being tested here as well. So not too bad short term, but longer term, I mean, you broke some very important levels, so we'll see what happens there. So that's crypto and your other markets. I still am a fan of how Bitcoin and Ethereum are consolidating. I think the US 10-year and the dollar currency index look bearish. Metals, I'm a little bit neutral on right now, but they do have those down sloping channels, and the Hang Seng Index is getting a short-term dead cat bounce. So that's what's going on apart from stocks. Let's head on over into the stock market. Like I said earlier in the stream, tomorrow we have FOMC. And what do we look like technically speaking going into that tomorrow? Well, you know, I always like to say this before we have a big day. The charts matter a little bit less, right? Because the news is going to affect things a lot more. But for the sake of the stream, and you should never do this, but just for the sake of the stream, let's imagine that there is no huge news coming out tomorrow or the FOMC. And let's just talk about what's technically happening. So if you haven't been around the last couple of weeks of streams, I've pretty much had this standpoint where I am switching back to bullish into the end of the year. However, short term, that's changing. I think short term, we are now getting bearish variables. So let's start charting out some of these bearish variables short term. All right. We have this bear flag developing on the S&P 500. You also had a bearish engulfing candle today, and you are rejecting this zone of resistance. You can see this high from July 8th, low from July 26th, lows from the beginning of September, highs from the end of September, and your last few days of highs have all been around this 390-ish level on the spot. It's a very big resistance. If we look at the SPX actually, and I use the 100-day moving average, you can see you are also rejecting that a little bit right now. It's that red line there as well. So the SPY and the S&P 500 in general is at a pretty big resistance level. It has a bear flag. Volume is declining. You're at the upper Bollinger Band. These are bearish variables in my opinion short term. If we go down to lower time frames on the 4-hour, you can see that wedge over there kind of looking like it's testing a breakdown. You also have that 4-hour bearish engulfing candle with classic bearish divergence on the 1-hour. I have it charted a little bit differently. I connected these two lows, but you're barely still within this wedge as well. So it looks like one huge wedge, and if FOMC doesn't go too well for the market, you might get a very quick drop if you break that down. However, flip side, FOMC helps out the market. A lot of this can be invalidated if we simply get above this zone of resistance. So I feel like this is how it always is. We're at a huge make or break area. I think this is more bearish than bullish, however, but heading into FOMC, this is a huge make or break area. If it goes well and we get this type of a candle and we close above this resistance, that would be great. However, if it doesn't go well and we get this type of a candle, then you're breaking down. So you're probably going to see one of the two. I mean, it's always possible you have a very small day tomorrow where you don't get a lot of price action, but I don't know. With the FOMC happening, I doubt it. Let's look at the Qs now, which, this one looks a little bit different to me. And I'm honestly very surprised with how well it's held up, even despite almost all the major mega app companies not doing well after earnings. But the Qs kind of have this inverse head and shoulders looking structure, this back test of the down sloping channel. However, today probably should have been the day where you went for the breakout. Instead, you're losing volume and you have the bearish engulfing. So yesterday, this looked a lot better. If you take away this ugly candle from today, it looks a lot better. This is a very similar to, what was I going to say? I'm trying to think of the chart literally right now. There's one chart we just looked at. Let's see if I can figure out which one it was. Literally just looked at it and I'm losing my mind. But there's another chart that looks very similar to this and it did play out. It was an inverse head and shoulders with the down sloping channel. I don't know, I can't think of it right now, but if it comes to my mind, I'll let you all know. But yeah, it's kind of maybe failing because of the price action from today. So we'll see how that changes tomorrow with everything. The Russell 2000 also is approaching some it's approaching the 200-day moving average and this 188 level. You can see these lows from right over here. So that's going to be a resistance. You've got some hidden bearish divergence potentially as well. So not looking great short term from a technical standpoint, in my opinion. You could probably draw a little bit of a bear flag here for the Russell 2000 or a rising wedge with classic bearish divergence. So I think the variables are flipping back to bearish short term in the market. And I've been bullish for the past couple of weeks. I put out a handful of swings, all of which are pretty much green. But now, you could see I'm not really putting out any new swings until I see how this turns out. Somebody said oil. I think you might be right, AK. Yes, thank you so much. So the Qs actually look very similar to oil. You could see it has this wedge over here and it has this inverse head and shoulders looking structure. And then if we go over to the Qs, it's not a wedge, but it's a down sloping channel with that inverse head and shoulders looking structure. But the oil successfully kind of is creating this right shoulder. The Qs already did, and it's kind of up here, but it's doing this. So it's a little bit different towards the end of it. But the beginning part of it was very, very similar. And finally, the ARK ETF broke out of this wedge, held the support, classic bullish divergence. So the overall variable is nice. We got the bounce I was looking for, but again, short term, the potential for hidden bearish divergence. I'm not going to do it right now, but you could probably draw out a bear flag there as well. Bearish engulfing candle. You get the theme. Very quickly, the technicals are changing back to bearish. It's just a question of how FOMC goes tomorrow. And yeah, that's how the market's looking in my opinion. Let's move over to some individual names, and let's look at the swings right now. But what's up, Nerve, Laid Back, AK, Plebere, Zeke, Danny, Anthony, Udit, Max, and let's see, couldn't we see both moves? First fake move type thing after FOMC reaction followed by a true move rest week. Yeah, I mean, you know, at some point we probably will see both moves. It's just a question of which one happens first. That's what I'm trying to wrap my head around, and it's pretty tough when, you know, there's no way to really know how FOMC is going to go for sure. And love to see your name in the chat. What's up, Guy Nat? Guy Nat saying 18 watching, only 12 likes. That seems like a little bit of an issue. There's been 40 people that have dropped in here so far tonight. I could see it in the views. Only 12 hit the like button. Pretty weird, right? Pretty weird. But seriously though, thank you all for the support on the Fisker video I dropped yesterday. Even Fisker tweeted at me today, which is pretty cool to see. Shout out to everything that they're doing, and we're looking at the chart right now. If you want to see my larger update on everything that's happening with the company, go watch my video from last night. All I'm really going to focus on for the stream today, however, is what happened today. So if you watched the video last night, I talked about production, I talked about battery partners, charging partners, I talked about the short interest, the relation to the ARK ETF, I talked about the chart, I talked about meeting Henrik Fisker. I talked about all of that in the video, which is literally the last video on my channel if you want to go see it. But let's talk about what's happening more short term with the technicals now. You are back above, and you closed back above this very important zone, $8, which is very key. You can see all these lows over here. You're now back above it. On lower time frames, it looks like a cup and handle. I could draw it out for all of you really quickly. And you're very close to testing a breakout of this cup and handle in the 1 hour. I forgot who shared it, but somebody shared this like a week ago or something in premium. Even on the 15-minute, like it's like cup and handle inception, which I've actually seen quite a bit, where you get a larger cup and handle, but if we really look at it, it's a cup and handle inside of a cup and handle, right? This is like another cup and handle over here. And if we really look at it, then it's like maybe another one on like the 5-minute. I don't know, it's kind of crazy. But the big number is $8.47. You can see all of these highs over here. You even have some lows over here. 8.47 is a very key level for Fisker to break above, hopefully soon. However, again, the issue, which is a little bit worrying, not just for Fisker, but just in general, is all those bearish technicals on the market right now, and the fact that we have FOMC tomorrow. So we'll see what happens. You do have a little bit of classic bearish divergence on the 1 hour, so this is a huge make or break area. Does the market pull Fisker back and the classic bearish divergence confirms, and maybe like you break a demand line over here? Or does Fisker say, no thank you, it goes in its own way, or maybe the market doesn't go down, it breaks out of 847 and maybe revisits that $9 testing area, which you could see is like the next zone after. So that's the big question. My brain's really thinking right now, because if you watched the video that I dropped last night about Fisker, I went over to the weekly chart and I zoomed out and I looked at pretty much all of this as a Wyckoff accumulation range, with this kind of being the spring area. If we go back down to the 1 hour chart, however, go back down to this 1 hour chart, very short term. Let's do something. Let's do the same thing actually. Let me pull this picture up. But some of you might already be thinking what I'm thinking. Yeah. Let's see. The spring looks pretty large, however, but we'll see. It's hard to line this up perfectly. Something like this, though. Am I crazy? Am I crazy? Does anybody else see this? I feel like it's pretty good, actually. I mean, look at this. Let's map it out. I'm just following the candles. I'm not even following the black lines right now. Like, not bad. Not bad at all. And the spring is actually successfully happening. And you even got a retest of the spring. This is very interesting on the 1 hour chart. But it all comes down to, can you break above that 847 level. And if you can, then we'll see. But very interesting. Not only do you have this on the weekly right now, but imagine if 1 hour Wyckoff accumulation plays out and you get a short-term move, then that'll help the weekly spring take place to get you back above this zone. So like pretty much this is what we just looked at. Like it's like you have to really zoom in there. But if that plays out, then it lets you do this. And then we're really talking on the weekly. So just like we had that cup and handle inception on the 1 hour, we're also kind of getting some Wyckoff accumulation inception, which I wish I would have spotted that so I could have mentioned it in the video last night, but interesting. And let's go back over to the daily earnings. Thank you, TX Ripper 1. So just like the FOMC, I forgot to mention this, I'm so sorry, but literally just like the FOMC, earnings lines up with that too. So we'll see. I feel like the last few earnings for Fisker have kind of been a non-event, which I think makes sense. Like I don't think there's been any like insane moves after the last couple of earnings. However, it will be interesting to see what they say in general. But hopefully it's nothing that destroys everything taking place from a technical standpoint right now, because apart from the cup and handle and the Wyckoff accumulation range, you're still breaking out of this wedge you've been in for a year very quietly. You're still breaking out of it. So there is a lot going on, but you're not past any finish line yet. It's a great start. It's like the race, you know, they just started the race. Fisker's already in front, but the race isn't over yet. So you got to keep going, and we'll see if it can. Hopefully it can, but nobody knows. And then next up, we're going to keep running through the swings. Let me just quickly tell you how much that swing is up. Fisker swing is up 6% since Tyler did it. Tesla swings up 4%. It tried to break above this resistance today. Maybe kind of still has a chance. It's probably going to depend on the FOMC, but it's now back testing it. Remember, I've been looking at this the last few weeks on the stream. This 1 hour right angle descending broadening wedge. You kind of already broke out of it and then went up to the next resistance, which is this gap fill, and then came back down. So I guess this is the back test. We'll see if it can successfully hold or not. But that pattern has done okay. I don't know, but you go to higher time frames and it looks like a bear flag. So again, this always happens. I swear, this always happens. Like you have these mixed variables on like everything while you have FOMC. So not only do the technicals become a little bit of a 50-50, even though I am more towards the bear side on the overall market short term, but the actual like going into tomorrow is a little bit of a 50-50 too. So we'll see. Does Tesla successfully hold this back test and then move up higher? Or does this turn into a bear flag and maybe take you back down to retest the $200-ish support? We'll see. Next up, AMC. This is probably the most frustrating thing that's happened to a swing, in my opinion, in some time now. Yesterday, literally yesterday, okay, at the highs, the AMC swing I alerted was up 21%. It was only 3% away from the first target of 24%. And it has dropped all the way back down to being only up 2%. It hurts. It hurts a little bit. I'm not going to lie. So this was so close. Again, if this drops like a little bit more, it's going to be marked as a break even. So it's not going to be a failed trade by any means, but so close. So close. Kind of almost got a bearish engulfing today. And like, again, if we look at this as a bear flag, you kind of broke down from it as well. So very close. I'm not going to lie. I think the probability of this being a break even at this point is higher than it hitting the first target, just because of how much closer it is and how the market's kind of showing these technicals. But you know, it's not over till it's over, I guess, if any of you are a Yankees fan. And next up, we have CLOV. This swing is up a little bit. It was up more at the highs today. At the highs today, the CLOV swing was up 8%, pretty much like more than halfway to the first target. It did pull back later in the day, however, it closed up 2%. Not a lot of technical change though. This is actually very similar to Tesla. It went higher in the morning and then it kind of closed in like a back test area. It closed where you had resistance for the past couple of days. So if we look at this. So just another reason as to the title of the stream. Huge day for the market tomorrow, but also a huge day for a lot of the swings and a lot of individual stocks in general, because of the price action from today going up in the morning, then pulling back into the previous resistance from the past few days. but also because of FOMC, obviously. So it's like, it looked like we were finally breaking out across the board and everything. And then people remembered like halfway through the day, oh wait, is it really time to break out? We have FOMC tomorrow. Maybe we should wait first. And now you just kind of close in this area where you're just back testing the breakout, which still might happen. But if the FOMC doesn't go well, we'll turn into a fake out. So it's all just one big game by the composite operator. I mean, it is what it is. Like, you sign up to be in this game if you're trading, like, it happens. It happens, and you have to be able to accept it and manage risk. So we'll see. Overall, you spent a long time in this wedge and you broke out of it successfully. But short term, potential hidden bearish divergence, potential bear flag. You always know, as much as I love certain stocks, I'm always going to be honest about the technicals. I was honest about the technicals when it broke the major support over here, and I'll be honest about the technicals at all times. It's turning around a little bit, and it's not what I initially hoped for. So we have to hope that multiple of the stocks we just looked at, or many of the stocks we just looked at, and hang on to these threads that they're hanging on by right now, and get the breakouts that they were literally testing this morning. Right? Let's go over to the 1 hour. I think you shared this, Zeke. This is a textbook inverse head and shoulders pattern, right? And you were testing the breakout this morning. You were testing it. You were so close. You were so close. And I was looking at all of these charts in the morning, and I was thinking, wow, this is setting up. But if you're in the Discord, you might notice I didn't say much. I didn't say much because I wanted to see how we closed. And we didn't close as well as we could have. I'll put it like that. But we didn't close low enough to completely ruin the chances of these either. But we did close low enough to be in an area where it's very hard to tell. So this is the situation we are currently in heading into tomorrow. We will see what happens. Those are your updates on the swings. It's not over, but let's just say it looked a lot better early this morning compared to how we closed. And that's just how it goes sometimes. And if you are in the Discord, I did warn about the SPY getting closer to resistance, those variables changing a little bit. So it wasn't super surprising. That's why I wasn't trying to get too ahead of myself. Like, there have been many times in the past where we were like looking like we were breaking out in the morning, and I'm like pinging everyone, we're breaking out and everything. And then I just feel like a fool like 3 hours later when everything just turns around. So that's why now, like, especially in this type of a market, I wait until the close before I get excited. You know, I might have been a little bit excited looking at those breakouts this morning, but it happens. All right. So those are some updates on the swings. We did have AMD reporting earnings today. I think it closed 4% higher after hours. Overall, the stock broke out of a channel. Like, it looks like a lot of other names. Like, you got a longer term breakout, but you're kind of getting a shorter term bear flag and shorter term hidden bearish divergence. So the overall question, not just for this, but for many other stocks, is do the patterns that we just spent like 2 months creating and just broke out of play out? Or do these bear flags from literally the last 2 weeks ruin all of that 2 months of work? And the answer to that might play in the reaction to the FOMC tomorrow. So this is as big as it gets. It's like we're in the fourth quarter of whatever sports game you want to use as an analogy, but we're here. So we'll see what happens. Let me look at some other tech names. Meta today bounced up a little bit. I think there was some news that came out with TikTok. Here we go. Meta and Snap rise today after the FCC commissioner's calls for a TikTok ban. We'll see what happens there. But Meta, this is pretty much the chart right now after the drop on earnings. Not a lot of data. I talked about this last week. There's not a lot you can do from a technical standpoint. It's kind of in the middle of nowhere right now. It just comes down to a fundamental argument right now. Amazon down 5% today. Lowest prices since just after the COVID crash. You broke under this $100 support. If we go over to the weekly, you are now testing a breakdown. I don't know why it deleted. Why did it delete? You're now testing a breakdown of this major inverted cup and handle. I'm not going to redraw it, but you can see the cup over here and then the reverse handle over here. You are clearly under this support from these lows and these highs. The bottom of this zone is $82. You might have some shorter term supports in between, maybe a little bit around 95, but you're under the important level for right now. And you did also get a bearish engulfing candle today. So kind of a rollover day today for Amazon. Google also breaking down from this megaphone pattern. It is testing $90.50, which is an important level. You can see some highs and lows over here. If that breaks, then the next level for Google is around $85. Microsoft also broke down from this bear flag, bearish engulfing today. Retesting this 227 support, which was highs back at the end of 2020. And then I also want to look at GameStop, which yesterday went insane in the morning. I talked about this probably for the last week or two on the stream, this range. I talked about the breakout. You got the breakout. If you're in premium on Friday, this was the first time. Well, there was this, but I marked it a break even on the same day. And honestly, they actually went up pretty nicely on the same day as well, but it is what it is. But this was like the first time in a long time that I alerted swingable options. Most of the options I alert now, as you can see, are day trades. But if it's swingable, I say swingable. I alerted these GameStop ones. The Tesla ones I also alerted, but I marked them as a break even before the close on Friday. But the GME ones I left open. And they were already marked green on Friday because they already went up enough to be marked. They went up like 50% or something, I think, on Friday. But literally overnighting them one night. I alerted these on Friday. If you just held and you overnighted into Monday and you were there for like, I think like the first, hour or two of the day, it went up 500%. And it was all from this breakout. Let's go down to this. You can see like you broke out of this range, and this is what I talked about. Like, and I talk about this a lot on the stream. The longer the consolidation, the larger the pattern, not only the larger the potential move, but also sometimes the quicker the potential move, because you're just like, I'm trying to think of a good analogy here. Like imagine a pressure cooker. Like it's like, I actually really don't even know how pressure cookers work, but I assume there's some sort of scientific thing happening where there's like pressure happening, and then out of nowhere, like the steam comes out. It's like, it's similar to that, or like a tea kettle, like whatever you want to use as the analogy, but you're like really like, you're boiling, you're brewing, like whatever. I don't cook much or whatever, but, and then out of nowhere, it's like, there you go. Like the move just happens, and it could be big, but it takes a lot of patience. And the thing is, 90% of people are not patient enough and are not in at the right time just to experience this. Like you would have had to have waited. You either would have had to have waited this whole entire range, which, let me take the tea out of my hand as I was just talking about tea kettles. You would have either had to have waited over a month and sold it like that morning and not been busy, or gotten in at the perfect time just before the breakout, which, not to pat myself on the back, but literally like right before it happened, like right here is when I alerted it. Go back and look at it. Pretty much around noon on Friday is when I alerted it. And if we go back to this chart, let's go down to the 15-minute, and let's put an arrow at noon on Friday. Right here. This is where I alerted it. So you can see like it had all of this consolidation, and I alerted it right at that white arrow. So you didn't have to wait this whole entire time. And I even did alert GameStop a couple of times before that. Very quickly, didn't really go as well I wanted to. But it's, in the end, this is reward to risk. You can miss the first two times, but if you can have that accuracy on the third time, boom, 500% profit in like one day. It's crazy. So that was a really nice move. At this point now, GameStop is actually back testing the previous resistance as its support. As you can see, it did kind of flip 28, maybe a little bit of a wedge forming here. But it did reject the 200-day moving average, however. So we'll see what happens. But just an update on how that went. And yeah, what else? SOFI was up 5% today at the close, but at the open, at the high of the day, let's see. Well, it gapped up. At the high of the day, it looks like that was the wrong tool to use. It was up about like 19%. Let me look at the news. Let's see, I'm not seeing much. Here we go. Oh, it was earnings today. Never mind. So yeah, on earnings. But in general, SOFI is holding a major support and has held this support for quite some time now. You can see it over here. It's kind of like a range forming a little bit. I'd say the top is around 850-ish, but there is some resistance before that. This is kind of like, I guess, the top zone maybe. So a little bit of a range here. Pretty similar to Wyckoff accumulation in some ways. And you had like a wedge here too and everything. Like, yeah, nice move. And then the earnings happened. So you're just kind of, in the high of the day, you're at the middle of the range. Now you just got pretty close to filling that gap. So that was SOFI. I just saw another one of my watches. Uber was up 12% today. It broke above the 200-day moving average. This is kind of still a swing. it hit the second target. I alerted this, I believe, to everybody. I don't think this was in premium, but I alerted Uber as a swing to all of you in the Discord. If you're not in the Discord, it's free to join. The link is in the description. Somewhere around over here is when I alerted Uber. It already hit 2 of the targets. Actually, might have even already hit 3. Let me go see if I can find this on the sheet. I might just be completely confused. But now it's back above the 200-day moving average. So that's nice. Yeah, it definitely already hit all the targets. It was a 51% gain. Never mind. But maybe if you didn't take profits the first 2 times it hit the 3rd target, then it was this time as well. So good move there. And that was pretty much what I wanted to talk about from today. Nothing too crazy, I would say.
Or I may be at the funeral of a computer.
All right, so yeah, I think I'm gonna end it there. I'm not doing take requests tonight. I'm a little bit tired. I'm not going to lie. So instead, go watch the Fisker video. Okay, if you didn't watch it, go watch it right now. And if you watched it, go watch it again. But yeah, thank you for watching the stream. Hit the like button, hit the subscribe button. Join the Discord. If you want to join premium today, right now is pretty much the final time. This is it. If you want to join, go take a look. Even if you're like 20% thinking about it, just all I'm asking is just to visit the website, because then you could see what's actually there. And right now is when the sale is ending, pretty much in a few hours. So sale's about to end, almost 50% off for annual if you want to sign up tonight. And if you don't, that's completely fine as well. Just at least take a look. That's all I'm asking for. Okay. So thank you for watching the stream. Thank you for supporting me. I know it's not a great market this year, but all of you are real ones for sticking through the tough times. Should be live again tomorrow night, so I'll see you then, and peace out.